Hey guys, hope you're doing well. In today's video, I'm going to be taking a look at the S&P 500 Index, what happened in the past few days, and where I believe we'll be heading to in the future. So as you can see, in the past few days, we have sort of cooled off a little bit from where we were Wednesday. In my last video on Wednesday, I said that it's very likely we're going to see a little bit of a consolidation or a pullback given how far we rallied. And indeed, I think we have cooled off just a little bit. And the question remains, do we continue to go down or do we sort of stabilize? Could we even go up? I think that the market is still very much overbought. We saw that today. The market actually did go down a little bit. You don't see it too much on the SPY itself, but on the futures, there was some China-related tensions in the evening, and so you can see that we have actually fallen a lot overnight and recovered a lot of it before the trading session even began today. You know, on the SPY daily candle, you don't see too much of a movement, but actually we have pulled back all the way down to 291 equivalent on the SPY and 2910 on the SPY500 Index. China did release some sort of a security law that would give itself additional powers over Hong Kong, and as a result, the US doesn't like that very much, and it's very possible that we see some sort of retaliation from the US lawmakers, which could potentially hurt trade, and that would be very bad for a lot of companies that are having operations in China. If we look at what's actually moving our stock market today, we can see that the top losers are indeed Chinese companies, as to be expected. The US may crack down on Chinese firms even further. I believe Donald Trump said he wanted to limit how much money Chinese companies could receive from US investors. Not very promising news for a lot of Chinese companies that have aspirations to continue business in the United States beyond the Chinese companies. We also see that the weak side of the economy, such as the airlines, some of the oil and gas companies, Boeing, some of the banks, they're hurt by low interest rates these days, and the cruise lines, they seem to be the top losers for today. And on the other side of the market, we see a lot of tech companies doing pretty well. Apple, AMD, Uber, Shopify. Shopify seems to be up like every single day. It's, you know, you have the strong side of the economy as well. When we combine them together, the S&P is mostly flat for the day, and you know, we don't see too much going on. If we take a look at the daily candle again, I still do believe we're overbought. If we take a look at the RSI again, the relative strength index, we do see that we're still hovering around the 57 area, which, you know, it's not a buying opportunity, but the question is like, well, is this overbought? And it's not as overbought as where it was before. As you can see, we did cool it off. I do think we still will move lower to back towards around the 28 handle. When it goes down again, it may just continue consolidating and possibly even move another leg up. My resistance target on the 3000 remains. I think this is very strong psychological resistance. If we do move one more leg up, we should get rejected off of this level. And I believe that for support, 272 still remains. We've seen this level tested quite frequently. It wouldn't be surprising if we see it tested again. It's a little more clear on the SPY. Let me pull that up. Around 272, we see that this level is tested a few times here. Above that, I think 278 also serves as a little bit of a support. We may see these two levels being tested again if we do go lower, which I think is a very likely possibility. We may try to fill the gap over here, which could lead us a lot lower. This would be the first line of support. This would be the second. And, you know, we could bounce from here, though, and move higher. Now, if we look at the Fibonacci retracement level, it actually looks a little more bearish than the other indicators we've looked at. From the daily, we see that we actually did break through the 61.8, but we then fell right back into it. Well, kind of. We're sort of hovering right above it, but on the weekly Fibonacci, you can sort of see it does show a much more bearish sign. It looks as though we got rejected right off the 61.8, and we could move a lot lower. Now, I do want to say that these days I've been looking at a lot of other videos on the internet about technical analysis. A lot of people seem to be of the opinion that this entire recovery is fugazi, and you know, it's a low volume prop up by perhaps the wealthy elite. They just want to dump their holdings on the small guy. This is all fake. Once you buy in, they're gonna dump it, crash it. It's gonna go back down. It's gonna go lower than this. It's gonna go to 1500 perhaps. might even go lower. We might see 2008 levels again. And in response to that, I think I might be taking it a bit too far. I don't think that's possible. Sure, we're on low volume. People aren't, as mass panic selling as they were here, and they're not buying in volumes as large as they were selling in. Sure, that makes sense. But if we look at it historically, sell-offs usually do have a lot higher volume than recoveries, and that doesn't mean the recovery itself is fake. It's just sort of how the algorithm and volatility works. People trade a lot more when there's huge movements, and huge movements usually do happen on the downside more than the upside, because crashes happen more or less like that. Now, the reason I don't think it can go much lower is because there's simply too much money in the economy and people are looking to put it somewhere, and there's not a lot of great alternative investments. You look at bond yields and they're complete crap at the moment. You're not going to beat inflation by holding on to these things. Till the yields recover to at least 1%, I don't think anyone's going to be too interested in holding these. And you think about it, what else do you have to invest in? Gold, oil, maybe, Bitcoin. And if we do look at them, Bitcoin does seem to have rallied very, very well since the March lows. The interest rate cuts have really helped a lot of these alternative investments. You look at gold, again, we just broke to 7-year highs earlier this week. Similar picture with silver, not so much, but it still recovered extremely, extremely well. It just goes to show that people are looking to put their money somewhere that's not the US dollar and not bonds. And, when you limit down the number of real possibilities, the stock market is a prime candidate. People are buying good stocks like there's no tomorrow. Stocks like Shopify, PayPal, they're moving to all-time highs. Amazon's another one of those names. Does the fundamentals justify the price? In my opinion, no. But as the saying goes, the market can stay irrational longer than you can stay solvent. So betting against, a stock market where people are just flooding money into, it might not be the best idea. I think in the current market environment, the best idea may just be to swing trade on a day that has a lot of volatility, like something like this, where you see a large candle. You can buy something in the morning, sell something in the evening, be it like a put option, a call option, whatever you think will happen during the day. In the long term, I just don't think the downside is going to be as extreme as what a lot of people view it as. And as a result, it might not be a good idea to hold short for the long term. Again, I could be wrong. So with all that being said, that is my technical analysis of the S&P 500 Index. These are my ideas. I think we can go short for the short term, but in the long term, we might consolidate. I think in the long term, we might actually go higher. I don't like how it is. I don't think the fundamentals justify it, but with how it is currently in the stock market, who knows? The Federal Reserve is doing everything to push the stock market higher. You don't want to fight the Fed. And just a reminder, these are my ideas. I could be right, I could be wrong. Although I'll try to be right every single time, I'll inevitably be wrong. And so I hope that you may view my ideas as sort of additional information, but I wouldn't recommend trading solely off of my ideas. So with all that being said, I thank you very much for listening to my analysis of the S&P 500 Index, and I wish you the best of luck in your trading. Take care.